big one today has been Coforge. 26% stake has changed hands in the morning. That's more than 7,000 crore rupees. And what we understand that it's the promoter, Bearings Group, the promoter of Coforge, has sold in this very, very large block deal, which has taken place in the morning. This was expected. Abhishek had alerted us earlier, last night, that there is going to be a very large block deal where the promoters are looking to sell their stake. What's interesting is the stock price reaction. Now, one would imagine that if you have a 7,000 crore block deal, the stock price would be under pressure because it's 26% stake, but the stock has actually rallied 3.8%. Let me quickly tell you some of the reasons why. One, now the overhang of an impending promoter stake sale is out of the way. Now, promoters had a 70% stake in the company about 4 years back. They have been periodically selling stake in the company. So there was always that fear, when is the next block deal from Bearings going to come? But now that they've completely exited, that is out. Secondly, look at the way the stock has reacted despite so many block deals, right? As I said, they had 70% stake in September of 2029. They came down to 26%. But in that period also, the stock price had actually doubled. So despite the multiple stake sales by the promoter, the stock was unfazed by that and it focused on the fundamentals. Also, there are quite a few marquee investors in shareholding. This is as of June 2023. You've got FPIs holding 25% stake, mutual funds, and you name the large ones. You've got a Motilal, UTI, across the board, very large mutual fund shareholders in Coforge. And finally, the last reason is the fundamentals of Coforge have been very strong. Look at the way the growth rate has been. I'm not looking at 2021 because it's impacted by COVID and the industry struggled, but since then, aided by some acquisitions, Coforge has been, on a very strong wicket. They crossed $1 billion in terms of annual revenues, and that's quite a milestone. And even this year, when large cap companies are guiding for a mid-single digit kind of a growth rate, what Infy, HCL Tech are guiding for. So in that context, Coforge is still guiding for a double-digit growth, 13 to 16%.
Oh, those are really, really impressive numbers. In fact, good to have that context in place, Reema. Let's take this conversation forward. We actually have Sandeep Agarwal of Soilo Investment Managers to discuss this large, trade that's taken place in Coforge and really the way ahead for the company. Sandeep, thanks for joining in. So, until we get final information from the exchanges, we can only guess, and everybody's best guess is that this is the PE promoter selling out a large chunk of equity. How would you read into this? And, just essentially what lies ahead for Coforge with this kind of a big exit?
No, so, as Reema mentioned rightly, the biggest overhang in the company, despite one of the best performing mid-cap companies in terms of revenue growth and profit growth, was, people were always curious and worried also to some extent that when will be the next block coming in, because there was part sale at every interval. So, despite company doing extremely well, there was always a supply or a fear of supply which will come. Now, with this cleanup trade happening, I think the best thing to happen is that the real value or the intrinsic value of the stock will be easy to determine. And, there will be no discount which will be there due to supply overhang. So I think it is a very, very good move. And, it helps all. Basically, the investors can take a long-term call. They don't need to be in a fear of supply surprises anymore, and they can really value the company based on its real performance. So I think it is a win-win for both the seller and the buyer. It is a very good thing to happen. In my view, you will see probably many sell side analysts and many brokerages should ideally relook into the situation, and I believe that based on its performance, it deserves the upgrade.
Okay, in fact, Jefferies has upgraded the stock today from a buy. They've come to a hold, and the target price is 6,250. They again go on to say the sale removes a key overhang on the stock. The long-term growth outlook for the company remains strong. And they go on to say that how in the past 1 year, Coforge outperformed the Nifty IT by 26% despite a 13% stake sale by the promoter, mainly led by its growth momentum, which has held up better than their peers. And now with the stake sale overhang out of the way, they expect PE multiples to re-rate from current levels, which is driving that big jump in the target price. From 4,550, their target price has shot up to 6,250. But Sandeep, just a big question, right? Now you don't have one big anchor investor, a promoter in this case. Does it really matter it's going to have diversified public shareholding. They may be big names, but you don't have that one anchor investor, a promoter. How does it affect the fortunes of the company? And did Coforge get any kind of revenues from Bearings and all the companies in which Bearings had a stake?
No, see, you are right that, one perspective, we can see that, there is no promoter in a sense, but we have seen great companies in India creating a lot of wealth without promoter. So I think that is just a perception issue, not anything else. And remember, the biggest news which is there is that, if you see the ESOP, for example, only 1.4 million has been exercised till now, and another 3 to 4 million are there which can be granted. So that is a very big positive news, which means that, if you see this 1.4 million ESOP also, which has been vested and granted, I think, all the top management has been covered, particularly the CEO and others who were delivering super normal growth despite, continuous supply in the stock. So I think, it will basically become another professionally run company without a promoter, but very good management. And secondly, I think, generally, whenever this good private equities come, they do help companies to, get foot in the door in some of the clients and geographies. But it is not that, directly some revenue is coming. It is purely merit basis. Secondly, even when they go, they don't take away the clients or something like that. So I think, from that perspective, it is a purely merit basis business which they have secured. So it is very positive for the company in my view.
Okay, got that. Sandeep, but with this deal, now that the free float has increased, do you see the weight really going up in the FTSE and the MSCI indices?
See, that is a little technical for me to answer, but I think yes, if there is a possibility with free float going up, generally, the weight should go up. But I think that should not be a deterrent to, the fundamental and performance of the company and stock performance of the company. It should ideally be positive, because now with more free float, it gives an opportunity of liquidity as well.
Okay, thank you very much, Sandeep, for joining in with your perspective. Get into a break. On the other side, we'll discuss